Welcome to Corner Class Tampa. And today we're going to talk about the 10 reasons why most investors fail. So if you're interested in finding out how to avoid failing like most investors do, this is the show for you. Stop your All right, welcome back and welcome back. My name is David Carmena. I'm a host for Corner Class Tampa, and today we're discussing the 10 reasons why most investors fail playing the real estate game. But before we go there, let's go ahead and bring in Gilbert Bennett.
Good morning, good afternoon, everyone.
Hey, so welcome, Gilbert. Welcome back to Corner Class Tampa. I am going to talk about the 10 reasons why most real estate investors fail. But before we go there, give us a little bit about the market, today's market.
Well, actually, so I think I mentioned maybe last month that Fannie and Freddie, when we're talking about investments, had put some restrictions on lenders in general. So that could be your bank, Chase Bank, Wells Fargo. That could be your broker like me, My Easy Mortgage, or the lenders we work with, the wholesale lenders we work with, in terms of the number of investment properties they will be purchasing. And those restrictions came from the Treasury, who told them we're only going to support buying 7% of your total portfolio, meaning if you lend out on 100 loans, only 7 of them can be second home loans or investor loans. So I put a significant restriction, and we've seen some lenders kind of pull back on pricing and increase rates on the investor loans. But for single family home markets, we're seeing rates going back down right now with some of the inflation fears going away. I think there was some major inflation fear with the large stimulus package Joe Biden signed into law when he first came in the office, and then the infrastructure project he's working on now. There was some inflation fears, but that really hasn't panned out. The Fed's analysis of the most recent jobs data and inflation data is essentially that, no, things are trying to kind of normalizing because there was some pullback or deflation during the coronavirus pandemic a year ago that created a lack of purchase power, a reduction in price. So all we're seeing is normalizing. We're not seeing any fear. The Fed doesn't have any fear of inflation. And the market has responded positively in terms of buying long-term bonds, treasuries going back down a little bit. And we're seeing good rate improvements, in particular on government loans, but also on conventional loans. When it comes to the investor, we're still seeing, if you're looking at the Fannie Mae, Freddie Mac financing, that is fully documented, 25% down payment financing, you're looking at probably rates in the upper threes. And if you're looking at financing where you have limited documentation, like your bank statement loans or your debt service coverage loan, which that term is the rental property supports the payment. Right. Those loans, depending on your down payment, your rates can be as low as, I would say, about 4.5%, and probably range up to about 6.5%, 6.25% if you want to put the minimum down, which is usually 20%. So a good range there. Depends on kind of what your strategy is. Maybe you want to hold on to more cash to buy more property. You might get a higher rate. As long as the cash flow still makes sense, the deal still makes sense. But that's where we are in terms of the market right now. Rates as they stand for single family homes and investors.
So I hear a lot about, are we in a bubble, or is there, is the bubble going to burst if we are in one? What are your thoughts about that?
Well, so David, you and I, our market is Tampa, right? And when people say to me, we're in a bubble, I ask them, have you reviewed the latest Census Bureau data for the population growth of the Tampa metropolitan area, the Tampa MSA? The Florida MSAs as a whole, almost. It seems like every metropolitan area in Florida every major city MSA has an increasing population. And the other big thing that we're seeing, David, is I'm still seeing the majority of purchases and transactions coming across my desk are for primary residences. They're not for second homes. They're not for investment properties. They're for primary residences. I think the last major bubble was caused by a number of people going out and, oh, I want this investment property. I want that investment property. Oh, I don't have a job. I mean, if you watch The Big Short, right? I think there was one of the stories was a stripper with no documented income who owned 6 pieces of real estate or something like that and had bought them all by financing them 100%, right? There's still more stringent guidelines, one on financing. So if you want to buy investments, you got to put more skin in the game. And in terms of primary residences, we are seeing a lot of price, but I think some of that price increase is due to the fact that rates are so low that people aren't seeing. I was just talking with another lender last Wednesday, Thursday, and he pulled out a chart, which is a pretty useful chart. And it said, hey, if I bought this house last year, it would have cost me X, and the interest rate on it would have been Y, right? If I buy the same house this year, it costs me $30,000, $40,000 more than X, but because the interest rate is this much lower, the payment's actually lower this year to buy the same house. And so when you look at the timing and you look at the way rates have impacted price, what we'll see is, I think we'll see a slowdown in price growth when rates go up and people say, you know what, I can't afford that payment. I'm not willing to pay that payment. So that may be the thing. And Fannie and Freddie may get involved too. You know, Fannie and Freddie have consistently increased over the last few years, the conforming loan limit. So now it's 548,250. And so you can get a very easy to use conventional loan with Fannie Mae financing from just about any lender in the country on up to a $548,250 loan amount. When that limit was 484, guess where we started to see price stops? You know, we started to see people, well, that's the loan they want because a jumbo loan might require more documentation. A jumbo loan might require a lower debt to income ratio. A jumbo loan might require a larger down payment. So we started to see, so Fannie and Freddie have a big impact on that with them increasing the price and all that. So I don't know, you know, I don't think we're in a bubble as much as what I tell people is I say I do expect the price plateau. I can't say I expect major price declines only because we have so much population growth here in Florida. Now, can I speak on every market? No, I don't know what's going on. If you in Podunk, Ohio, and you got major price increases in your house and everybody's moving out and not in, then that may be backwards. But this is a supply demand thing. This is an economics curve. More people are moving here than there are houses available to buy.
Okay, so it is strictly supply and demand you think is causing that, not artificially inflated economy?
I don't think it's an artificially inflated economy. I think it is a supply demand thing. I mean, you know, an appraiser has to look back at history and say, is this price justified? And sometimes that clashes with there's 7 offers over asking price on this particular property. I think it is a supply demand thing. People, if you want to buy a house and you got to bid up to buy a house, and maybe you just sold your home or selling your home for more than you paid for it, so you have a little bit extra cash to put into your next home, you know, maybe that's why you're paying more. You're willing to pay more. Or if you want to move to Florida from somewhere else, and maybe you already sold a house somewhere else, well, you're moving to Florida. You don't have income taxes. Maybe you got a raise. You know, it's a lot of things, I think, but it's more supply demand than artificial bubble. I mean, there's really a lack of supply, and it's buying season. It's springtime. People want to buy and move in the houses. Excuse me there.
Right.
So that is it. I think it is a supply demand thing. And I think it's because of the population growth we're experiencing here. So I can't say how long it's going to last, but I don't think it's going to slow. You know, I don't think it's going to stop or going to go in the opposite direction until population growth moves in the opposite direction.
So, you know, this show is an investor show. So what you're saying is that if you can get your hands on inventory as an investor, then you're looking pretty good.
If you can get out there and find you some off market stuff, some distressed property. I'll give you an example. I just got a deed yesterday for a lot in Plant City that I'm going to build on. I've been working on getting this deed for a couple of years, but I paid very little for the deed. Had this deed been marketed on the open market, it probably would have fetched, 3 times what I paid for it, but I didn't get it off the open market. I got it by using one of those strategies, by finding sellers that need to sell and getting a price we can agree upon.
Yeah. All right. So Gilbert, thank you so much for the market update. And really that leads into our topic for today. What are the 10 reasons why investors fail? So let's go right into the first reason. Are you interested versus committed? Now, Gilbert mentioned about finding a deed years ago that he was able to acquire, and now that deed is worth 3 times the amount potentially that he paid for it. So again, let's go back to interested versus investor. If you're interested, you're in on the market when it's hot, you're out when it's cold. It's a hobby. It's a hobby. But are you committed? If you are committed, then you're in it for the long haul. You're making multi-year plans. You are it's not a hobby for you. And we see a lot of investors, and they think of it as a second income and a residual income, and they don't have to do the work. And while you can do a couple of deals a year with it, being a part-time type of gig, you're not going to be making multiple deals, multiple moves, multiple amounts of money, huge amounts of money, when you're not committed. You don't have a routine. You don't have a schedule. You're not treating it seriously, treating it as a job. So that leads us right into our second reason why real estate investors fail, and lack of plan or no plan. A lot of real estate investors, kind of like going back to our first, is that they have no plan, no structure in place. Last show, we talked about, the daily habits. We talked about a routine. We even covered having a schedule where the first half of your schedule, first quarter of your schedule, really leads you and drives you through the rest of the day. That actual schedule is pretty important because it gives you a plan. It gives you structure. If you wake up in the morning and say, well, I'm going to do this, or I'm going to do that, or, I'm going to do something that is unrelated to your business, that's no plan. That's not a plan. That's not a structure. That's not something that you can follow to build success. But if you wake up in the morning and say, okay, the first part of my morning, I'm going to do these things. I'm going to I'm going to educate myself on the market. Second half of my day, I'm going to make my phone calls. And based on those two things that I'm going to do throughout the day, those 2 scheduled events that I'm going to do in the first half of my day, that's going to drive me and help inform my second half of the day. Because again, if you are making your phone calls and someone says, hey, sure, I need your services, come on over, let's take a look at my house, then you have to have time where you can, in the rest of your day, the second part of your day, where you can go over there and have investments, or and make an investment in that particular person's home, buy the home, or possibly help them out of that negative situation that they're in. So having a plan is important, and your daily schedule is important. So if you haven't reviewed our last show, CCT 23, where we talked about that daily schedule, about that plan, then you definitely want to do that, because that is pretty important. Having that plan is pretty important. The next item that is a reason why agents or investors fail is, believe it or not, is fear of failure. They don't want to get out there. They don't want to make a commitment. They want to look good. They want to pose. They're dressed to the max. They are on Instagram, hey, or something like that, but they're not doing the work. They are, when you call a homeowner, there's going to be a lot of rejection. I'm going to be honest with you guys. If you make 100 calls and you get 20 yeses, let's go talk, you might get 2 to 4 owners that say, I'm willing to sell my property at a price that you're willing to pay. So really, you're looking at 2 to 4% return per 100. So that's a lot of no's, y'all. That's a lot of no's, or I'm not sure. Call me in a month. Let me talk to, a significant other, a grandma, a papa, or somebody like that. When they actually have the decision-making authority, there's a lot of no's, and there's a lot of negative conversations that you may hear when you're really offering a service to help them out of their situation. We talked about before it being a win-win situation. What you're doing is that you're providing a service to them that will help them out of a distressed situation. Ideally, they will tell you what they need to sell their home for. They would say, well, maybe I'm buying another home, or my home is too far gone. I don't have the amount to repair it. Code enforcement is on my butt. I don't have the money to clear these fines, and I'm getting fined, $10, $20, $100 a day in some cases. And, the fines are just racking up. I owe taxes, my tax bill is this amount. I just don't have the money, but I have equity sitting in my house. And, so I can cash out on the equity. I can sell the home to you. I can take care of all those things that I need to take care of. And that's my win. Medical bills is another one that's common, where they have a issue that happened either to themselves or someone in their family, and they have this huge medical liability floating over there, and they have this asset that they can sell to you, the profit from which can be used to pay off their medical exposure, or help a family member out. So there's many ways where you're going to run into distressed properties where it's a win-win situation. You buy the property at a fair price. Don't take advantage of them, because what goes around comes around. You buy the property at a fair price. What you're have a good idea of what the cost of the rehabbing the property will be. So you have your after repair value already in mind. Of this is, I buy the property at 100. I can rehab it for 20, 30, 40, somewhere around there about, and then I sell it for 200. That's easy math. So you're making roughly around a $50,000 profit. If you deduct the cost of sale, then it's somewhere around $40,000 profit, 35, 40,000. That's not a bad day, guy. That's not a bad day. So if you have something like that where it's fair for you, and then the owner says, hey, look, I all I want is, in this particular scenario, all I want is $100,000 for my home. And you get it to me, you pay off my liabilities, which is attached to the home, maybe back taxes, or maybe, it's code enforcement liens or something like that. I'm walking away from the table with X amount. That works for me. If you can do that, Mr. Investor, and I can walk away with X amount of money, I'm willing to consummate the deal. This is a win-win for both parties. Remember, you've already run your numbers. You know what the house will sell. You know the after repair value. You've done your comps. If it's a win-win, those are the best situations for you to be in. So those are our first top three reasons why investors fail. Just to recap, one is interest in they are tourists. They're interested but not committed. Two is they don't have a plan. They wake up, uh, it's noon, 1, 2 in the afternoon, and all of a sudden they're trying to make phone calls. If that, sometimes they may may not even make any phone calls. One thing that I mentioned about no plan is that you want to tailor your activities to your client. If you have the best chance of meeting your target market, your perfect client, calling that person from 10 to 12, but you consistently try to call them at 2, 3, 4 in the morning when they're 4 in the evening when they're not available, guess what? You are not scheduling your activities to the best opportunity for you to reach your perfect client. Think about your perfect client, schedule your activities, but have a plan. And as I suggest, the first half of your day should be morning motivations to get all that negative speak that you're going to hear, kind of fortify yourself. Then you would do market, know your market. We talked about driving for dollars, talking about looking at the stats in your market, your geo form. And then lastly, making your phone calls. If you do those three things, you would go make major strides into not being an agent that a investor that fails. You will not be on this list of the 10 reasons why most investors fail. And then the third one we talked about was exactly that, fear of failure. A lot of investors don't get started because they're afraid to put themselves out there. They want to pose, they want to act like they're an investor, or they're secret investors. I call them secret agents. They act like they're doing the work, but they're not doing the work because they're afraid. They're afraid of the negative phone calls that they may hear. They're afraid that they will be rejected. That fear of failure is a huge reasons why a lot of investors fail. All right, so we're going to take a quick break. We're going to come back and we're going to cover the next two reasons that why most investors fail at being a profitable investor, and that's what we're here for. We're looking at return on investment. We want to invest our time, our treasures, and we want to get a return on investment, ROI. So after the break, we're going to talk about the last two reasons. All right, and we're back. And so number 4, let's get right into it. Hanging around the wrong crew. Most of us are investors, at least the ones that I work with. I have focused and dedicated myself to helping new people play the real estate game, new investors. The seasoned guys, they've learned this trick, is that sometimes the people that you hang around in the hood, your boy, your girl may not be in the best interest for you for this real estate investing career. Now, you can still hang with them. I'm not saying leave them, but for your real estate investing career, you got to hang around with a different crew. You want to hang around people that is actually doing it, not actually talking about it, or worse yet, have no experience in it. They may have seen a YouTube channel or two or something on HGTV, and now they're experts in the real estate game. That's not the crew you want to hang around with. You want to hang around people that are actually doing it. You can do it several ways. You can have a mentor. That mentor could be paid or not. You can have studied and researched the from legitimate gurus on either social media or taking a class, something like that. You can have a lot of people. What they do is they would look at people who have made it and who've actually done it and model what their success. So you would look at an investor or an organization that is in a community doing something, and you model what they did. Oh, okay, this is how they started. This is whom they used. This is what they did. And then you say, well, I'm just going to do that. I'm going to do exactly what they did until I figure out on it my own the best way to go about it, and then I'm going to branch out. So if you have an organization that have a structure in place, you might want to plug into that organization and learn if that structure works for you. Either it will or it doesn't. There are many investor groups that you can meet up with, and you have these like-minded people. We have a Facebook group, a private Facebook group, where we are talking about projects and that we're doing. We have one right now that I mentioned before on the show, the 83rd Street project, which is a live project that we of a home that we're rehabbing in the Tampa Bay community. You can learn from that. That's in our private Facebook group. We'll talk about that a little bit later on. Or again, you can follow Corner Class Tampa, where we talk about one technique or a techniques that you can use for helping your real estate career. But the key is that you want to get around people that are doing it. And sometimes your fellows in your hood, while they got your back, they don't have the experience to help you out in your new adventure because they've never been there. So hang around and doing with the wrong crew, listen to possibly those negative comments and influences from that crew. Oh, you can't do it. You've never done it. No one on this block has done it. Oh, you want to make money in real estate. Oh, okay. Well, this is what you need to do. And this is how you buy a house. And this is and they're renting. Those are not the people. That is not the advice you want to take. You want to take the advice of someone who's actually doing it. And as always, if you get stuck, you find a deal and you get stuck. If you just type pound deals to us, or go to our private Facebook group, or go to our website and Facebook page and leave a comment, we'll help you out. So wrong crew, number 4. Number 5, lack of networking and prospecting. So this is kind of the opposite of, or part of, the wrong crew, is not associating yourself with the right crew. You're not out there networking with people who are doing it and prospecting for new clients. Here's the key to that: new clients. If you're only talking, you have to follow up. Now, don't get me wrong, you do need to follow up. But if you're following up and you constantly following up and you're not adding to the pipeline, then after you consummate that deal, you have no pipeline. You have nothing else until you have to until you prime that pump again. It takes 2 months, 3 months, 4 months to get someone in your pipeline and to rehab and sell that property. And if you're not simultaneously at the same time looking for other opportunities by prospecting your farm area, then once you sell that house, it's going to take another 4 months potentially for you to get the next deal. But if you're doing that in parallel, you got your first deal, you rehabbing that deal, and then at the same time, you're continuing to prospect other people, other opportunities. Then once house number 1 sells, then hopefully house number 2 is ready to go. You have that under contract. You have your crew ready, and you can move your crew from house number 1 to house number 2. And then again, same thing. While you're working on house number 2, you're trying to find deal number 3, opportunity number 3, the third person you can help. So networking, prospecting, finding new people to talk to while you're still following up on your old leads. But then also you're networking, you're associating yourself with people, investors that are in the market and are actually doing it for real. They're committed. They realize that this is your business, a business that you own. It's not a 9 to 5 where you take weekends and stuff out. It's a business, and it's your business, and it's a business that you can make a lot of money if you continue to prime that pump. So those are the first 5 of 10 reasons why investors fail in the real estate game. The next show we have, which is next Wednesday, we're going to cover 6 through 10. We're going to have a check-in on some of the projects that we're doing. But that is the first 5 reasons why investors fail. They're not committed. They don't have a plan. They fear of failure. They're scared that they're going to fail. They're hanging around the wrong crew, and they're not networking and prospecting the next deal. So after the break, I'll have some final comments, but those are the first 5. I'll see you on the other side. Welcome back, and I want to again thank you guys for watching Corner Class Tampa, the 10 reasons why investors fail. We covered the first 5 reasons. Next Wednesday, we're going to cover the remaining 5. But if you like content like this, I need you to help hook a brother up. Go ahead and like our page and make comments. Let us know if there's something that you would like us to answer, a question you would like us to answer, or a topic that you would like us to cover. In the meantime, we are going to cover various topics that will increase your professional development, make you a real estate investor that is committed to your craft, and make you an expert in your area, so that you have that residual income from playing the real estate game. And that's what it's all about, is having another stream of income where you can play the real estate game and make some money. It's said that, you should have 7 streams of income. So if you are using real estate as one of your primary streams of income, while still trying to achieve the other, 4, 5, 6 other streams of income, then that is a solid foundation for you and your family to live on. So do the work now and enjoy the profits from that work later. What I want to cover is that I mentioned that we have a private Facebook group. In that private Facebook group, what we have is various content that is exclusive to that group. We talk about the 83rd Street project. We have all of the history, all of our catalog of shows are accessible through that group, as well as you have the opportunity to talk to me. And if you get stuck in a project, we have tools and resources that are there available to help you out. So we are in the private Facebook group. You have all those things. You can easily join the private Facebook group by going to cornerclasstampa.com on our website, or look at on Facebook, cornerclasstampa.com, under groups. You go there, say that you want to join the group, answer a couple of questions, and you're there. I've dedicated the last year and a half, 2 years of my life, of my 15-year real estate career, to help people what I call learn how to play the real estate game. I really am passionate about empowering individuals so that they can use real estate as a foundation or at least one of the pillars of their economic success. So if you're interested in learning more about how to play the real estate game, again, like our Facebook page, like our Instagram, like our YouTube channel, cornerclasstampa.com, and we will endeavor to cover topics that will help you play the real estate game. Stay grinding.